Welcome to another Wall Street Informer production on WSI TV.
It's time for a brand new episode of WSI TV. Welcome on in. I'm Sean Bauer. That's Jordan Bishop, both here from Wall Street Informer. And we have a really good episode planned. As I'm sure you can tell, I'm a little bit under the weather here, so bear with me. I'm letting Jordan bring all the excitement today. But we have versus results. I know we have some brand new IPO information we're bringing to you.
Yep.
Another edition of the Trader's Handbook, which I'm really excited about. It is really my favorite way to trade, and a trick I use over and over again. And then I think we're going to end up with a new versus pick. So,
yeah, definitely. We've got
a lot to cover.
Action-packed episode, you know.
Yeah.
But first, I mean, we've got to talk about it, right?
Yeah. Jordan, what the hell is going on with the market?
I don't know. Every week we're talking about the Dow Jones, but the other night, as you may have seen, Trump gave his first speech to Congress. And, you know, traders and investors were saying the market could go up sharply or down sharply, depending on how specific he was in his rhetoric. And,
right.
I mean, you know, it's just crazy. It opened up the next day. The Dow Jones opened up the next day 300 points above what it closed the day before. First time broke 21,000. First day it closed above 21,000,
right.
All-time high.
Exactly.
You know, so I mean, I was skeptical before that speech. I didn't know whether to keep my money in, take my money out, shake it all about. You know, it's like, I don't know. But now with this trader optimism, I'm really feeling comfortable at the moment, you know. So
I know, yeah.
I'll keep it in there for now.
Clearly people are still riding this train. And a point you made earlier this week, Jordan, this is really a microcosm of what the market's been doing since November, because just like the other day when it closes above 21,000 for the first time, it was all purely on speculation.
It was.
Just
yeah.
What's Trump going to say? Okay, now we're speculating. Right. Everything's going straight up.
The market is running on fumes of speculation.
Yeah,
that's all.
Incredible.
That's all I can say about it. I don't know.
Yeah.
I don't know what else to say. But it's good for us. It's good for us bulls.
Sure.
Want to keep buying. We want to keep seeing it going up.
Right. As long as you're with the trend, you're going to make a lot of money.
Exactly.
Yeah.
So moving on to our versus picks.
Yeah.
You know, and I'm just not having a good little run at the moment.
I know.
You know?
You're getting pretty unlucky here, Jordan.
Yeah.
Another loss. Thank goodness I won round 4 of versus with my pick UNVR. It's Univar. We opened at 29.50. It's just closed around 32.50. So I mean, a nice 2-week gain of 10%.
10%. You know, that could have been, if you had 100 shares, that could have been a $2,950 payout for you at the end of the day. You know.
Yeah, money in the bank.
Right.
Yeah. So that means it's time to spin the wheel of misfortune, Jordan.
Yeah,
are you ready for that?
We've got a new way of doing it this week, haven't we? We're going to switch it up a bit.
Yeah, I'm a little bit excited. We can actually get it all done right here. So I think we have some of our favorite punishments on here. Hot dog hat. We added hot sauce shot.
Yeah.
It's brand new. That one sounds terrible.
Again, from our operations director, Mark Edwards.
Yep, another brilliant idea from Mark. So you ready to get this wheel?
Yes, let's go for it.
All right, let's do it. I'm so excited.
What we got?
Hot dog hat. Let's go. All right. I actually really like this one. You look fantastic with a hot dog hat on.
Thank you. I wear it out and about when I'm going out, you know, so it suits me.
Yeah, perfect. All right, so next week, Jordan will be in the hot dog hat all episode long.
Yeah.
So we'll all get to enjoy that together.
Yeah.
But Jordan, I want to switch gears, move on to what we're calling the early bird trader. And get us started with this.
Yeah, this is I'm excited to bring this to you guys today because basically we've been looking at stocks over the past couple months that are new to the market. You know, when a company goes public with their shares, they call it an IPO, an initial public offering.
Right.
And yesterday we had one that set off, and it just seems like it could be the next Facebook or Amazon even, or
a lot of upside, a lot.
Right. So it's it's Snapchat or Snap Inc.
Right. The parent company for Snapchat, the phone app.
Yeah. The picture
sending
messaging app or whatever it is. And so it went public at $17 a share.
Right.
We won't see movement on the first day. It's sort of like a consolidation period to see how many buyers, how many sellers.
Right.
But this one could honestly go either way. I mean, we expect it to follow in the footsteps of the other big tech companies.
And you have sort of two patterns here that you kind of expected to follow.
Exactly.
Right?
Yeah, I've been watching this one closely. I did some research on it over the past couple of weeks, and you've got it's two similar companies are Facebook and Twitter, the two big tech social media stocks. So basically, just to give you a rundown, Twitter started off great. It bounced up like 78 to 100% after two months or something like that.
Oh, wow.
Yeah, and so but then it then eventually has sunken down to $15 a share.
So that was a quick payday,
right?
And then you were out.
In 2 months, you could have made your money and then got out. That's the first pattern. We could see this one going. Or the second pattern is Facebook, which opened up. It didn't have a strong first few months. It actually dropped quite a bit in the first 4 months. And then since then, it's risen something over 200% to where it sits today. So that's more of a long-term trade. So I mean, if you're going to get in on Snap when it is available to buy, you could either see that quick return or you could see that long-term investment. But if I was trading it, I would stick with it. Just because there's so much potential for these tech stocks.
Definitely. Yeah. So maybe if you see that quick spike right away, over the first month or two, that could be following that Twitter pattern.
Yeah.
So take that payday.
Yeah.
If not, could be that more long-term. Sort of that proper investment.
Exactly, but it'll definitely be an interesting one to watch either way, and you could always short sell it if you feel it's going down.
Yeah, sure.
But yeah, so I mean, I think we were going to get to the topic of the evening.
Right, yeah, we're another installment of our Trader's Handbook. We got into that last episode, I believe.
Yeah, we did the paper trading. If you're curious about paper trading, go back to our last episode and we talk all about that.
Right, yeah, so this time we're talking about options. This really is an overview because there's so much to get into with options. But like I said, this is really kind of my favorite tool to use. I trade using options all the time, and it's because it gives you just huge returns for small stock gains.
Yeah, and usually in a minimal amount of time, I mean, you've probably heard the word options thrown around. I know we throw it around and we try to explain it as best we can, but now we're really just going to give you the basics, so you have that stepping stone in order to, maximize the amount of money you can get out of your trades.
Right, and we're going to do a quick demo here just to walk you through it as we talk you through it. So let's get right into that.
All right, now before we jump into this virtual trade walkthrough we're going to do with you, I just wanted to clarify a few terms that you're going to need to know. We've got the put option and the call option, and if Sean, you could just explain a little bit about each of those for me real quick.
Yeah, definitely. So a call option, whenever you're buying a call option, you want the stock to go up.
Right.
You make money on that call option when the stock goes up. So the opposite's true with a put option. If you buy a put option, you actually make money when the underlying stock goes down.
Right, yeah, and I mean, you could do other things with calls and puts, but for now we're just going to stick to just the buying to keep it simple. In the future we'll move on, but we're going to run through a virtual trade for you right now and show you exactly how you do it.
And as I get this launched, just another note is, whenever you're buying and selling stock, you're buying however many shares of Apple. Whenever you're buying a call option for Apple, you're not actually buying the shares. You're buying a contract that sort of puts you in control of all the shares in that contract. And for each one, each option contract actually is for 100 shares. So while you're not actually buying the shares, you're in control of them.
Yeah.
Which is where all that leverage comes from. Because here, we'll just check out some Apple options real quick. And let's say we're trying to buy because we think it's going to go up. So we'd put in a call here. And the expiration is something we'll get into as well. But basically you pick whenever you want the contract to expire.
Right.
And that's going to affect the price of the option as well. But here's what I'm looking at now. So we're looking at the ask column. And this is for, again, a call option contract for Apple. So while I think, off the top of your head, do you have any idea what Apple shares are at now? Over $100.
Yeah, 138 or something like that.
Yeah, that actually sounds right.
Yeah.
So you can see here, yeah, actually this makes sense. So they're between 135 and 140. So if I bought 100 shares of that, I mean, that's an insane amount of cash right there.
Right.
But if I want to buy a call option with $140 strike price, it's actually 100 times that 5.8. So it's only $580 to be able to control 100 shares of Apple.
Instead of 100 times that 138 price tag that you'd be buying, you know. But also with this, the fraction of the cost, the upside to options, I just want to touch on real quick, the upside to options is also magnified.
Yeah, you know? Absolutely. Right, so like the UNVR pick we had earlier for Versus, it jumped up 10% in 2 weeks. If I had a call option on UNVR, that probably would have been something like double my money on that trade alone.
Right, 100%. You know, it's...
Right. Yeah, so it's just a multiplier on your gains, which is why we love using options so much. Anytime we pick out that home run type of stock, we love putting an option on it because we know it has all that leverage and it's just going to give us insane returns.
Right, you're basically just putting yourself into a better position to get better money. I mean, if you're buying a stock, you have that instinct or you've done the analysis that you think it's going to go up. So why not maximize, you know, your gains? And you can only, in this sense, it's like having an inherent, you know, insurance. You can only lose if it does go down. You can only lose what you've paid for the contracts, you know, where Apple could go, it won't, but it could go from 138 to $10, you know. It's possible. It won't, but it's possible. Where the, you know, the options, you can only lose what you've spent on the options contracts.
Yeah, that's exactly right, Jordan. And a great point. Another thing, people who like to minimize risk, I mean, that's a huge benefit for using options. But just to quickly go through, if we expect the market to go down, if we expect Apple to go down, we'll put Apple back in here. Instead of buying a call, we would buy a put. Now this is, what short selling is basically just the opposite of buying a stock. So it's betting on the stock to go down. That's basically kind of the underlying tone of what you're doing whenever you buy a put. So you're buying the put contract, but you make money when the stock goes down.
Right. And you actually get the option to buy the stock at the, or sell the stock at the higher price if the stock goes down.
Exactly. Yeah, that's how it ends up making you money. But again, just whenever I'm expecting Apple to go down, I'm going to put in a put for the type of option here instead of a call for those reasons we just discussed. And you make, I mean, it's the same exact thing as a call. You get, you know, the 100 shares that you're in control of. It basically just shifts who's obligated to buy and sell versus who's obligated to actually sell the stock.
Right, and I mean, not to go into too much deal, but I mean, you may have heard of this sort of thing in real estate. You know, you could buy an options contract. You say you'd pay 100 grand for the house, you buy a 6-month contract. If the house goes up to 150 grand in value, you still pay the 100 grand and you can then sell that contract for 50 grand. I mean, that's a whole other ball game, but it uses the similar concepts. So
absolutely right. So again, using what we went over last week with paper trading, I would highly recommend starting to do that. You know, so you're using some fake money and utilizing some of these options. Whenever the next time you see a stock you really like, go ahead, put a call option on it if you expect it to go up, a put option if you expect it to go down, and see how that does, because this is a huge weapon that we have in our trading arsenal.
All right, and all thanks to Sean there, we saw exactly how you can use options to maximize your gains and, you know, minimize your risk. But now we're going to move on to you know, what will hopefully be a successful versus round for myself.
Yeah, definitely. And we're going to put a little bit of a twist on this one. So again, versus, we're just going head to head. We each pick one stock. And this time we're going to confine it to just penny stocks.
Okay, great.
So we both have the penny stock.
That sounds good for me.
And you want to go ahead and kick us off then, Jordan?
Yeah, definitely. I'm gonna go with Ensco PLC. It's an oil and gas contractor based out of London. The ticker is ESV. That's sitting around 950 right now. It looks like a good one to me, so I'm excited to see where that goes. Yeah,
anything the penny stock king picks, I expect to go up quickly. So hopefully I'll see what I can do against you with the stock PES. That's the ticker for Pioneer Energy Services. It's right in between 5 and 550 right now. So we'll go head to head on those and see what happens in 2 weeks.
You're keeping your word from last week. You know, I don't know if you saw, but I asked him. We had a question from a viewer. What is there a sector that you're favoring right now? Right?
Yeah, right.
That was energy.
Definitely. So many stocks look good right now. So that's why we're in it.
Yeah.
All right. All right, now as we conclude this episode of WSI TV, again, as always, please keep those comments coming in. Let us know versus punishment ideas, any questions or ideas you have for the show. The subscribe button's up on your screen now. Go ahead and just click on that. Subscribe to the YouTube channel if you haven't already. And just give this video a like if you enjoyed it, so we know we can keep bringing you more of the same stuff. Do you have any final notes for us this time, Jordan?
I don't this time. I'm still baffled about the Dow Jones and the whole Trump Congress speech. So I guess we pushed that to the forefront.
Right.
But keep watching that Dow Jones, keep watching that market, and keep watching the speculation.
Yeah, definitely. So thank you all for being with us today. Thanks for being with me, Jordan.
Thanks, Sean.
And we'll speak to you all next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.